Good morning and welcome to Stock Market Today. It's Wednesday, December 19th, 2018. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can follow me on Twitter. I'm at Dan Russo _CMT. And if you're on Stock Twits, I'm there as well under the same handle. And Stock Market Today brought to you today and every day by Chaikin Analytics. You can sign up to receive a free email to follow along with this show, as well as receive stock ideas. Head over to chaikinanalytics.com/today. So U.S. equities closed mostly higher in choppy Tuesday trading as a morning rally gave way to afternoon losses before reversing to finish pretty close to unchanged for the S&P 500. The Russell 2000 underperformed while the NASDAQ led. Treasuries were stronger across the curve. The dollar was down on the major crosses. Gold up 10 basis points. Oil, big story in the commodity space. WTI settles down 7.2% amid continued concerns of oversupply and slowing global growth. Outperformers on the day from a sector perspective: consumer discretionary, REITs, and tech. Underperformers: energy, as you can imagine, with that 7% drop in oil. Consumer staples, as well as healthcare. As we get to the desk here this morning, futures are up 80 basis points after that choppy day yesterday, volatile session. Asian markets were mixed overnight, with China a laggard, down over 1%. European markets are higher. Treasuries are unchanged to slightly stronger. The dollar is lagging on the major crosses. Gold up 10 basis points. WTI crude getting a little bit back, up 40 basis points after that 7% sell-off yesterday. As we dive right in here, still testing the February lows is the way to look at it. Support near 25.30. Resistance comes into play around the 26.30 level. This interim high here, 28.15, to me, that's the line in the sand. That is the key level for the bulls. Until the market is back above that level, we have to consider the fact that the bears are in control of this market. RSI remains in bearish ranges, and Chaikin money flow continues to dip into a bearish reading as well. So now we have stock weakness confirmed by momentum and money flow. Series of lower highs and lower lows. Folks, that's a downtrend. Near term, there's no two ways to slice it. The trend in the market is down. When you're looking for your ideas, I think it makes sense to, and what we're advocating for is to be extremely selective. Really wait for the premium setups if you're looking for names to put into your portfolio. And, opportunistically, if you do so, trade to the downside when conditions are right. So your market in a minute: S&P 500 ends a choppy session, nearly unchanged. NASDAQ outperformed while small caps lagged, and we'll look at both of those. One potentially encouraging development that we're going to drill in on here is semiconductor underperformance is diminishing. Now, this is an example of something that was bad going to less bad, but it's a start. And as these trends are changing, I want to start to keep an eye on them, pay attention to them, see if they begin to follow through. So we'll look at semiconductors here in a bit. Sentiment has moved further towards fear. That could provide a potential rally here in the near term. As I said, futures in the S&P 500 are up 80 basis points this morning. So from a market's perspective, for the Chaikin power bars, Dow, 1 bullish stock, 4 bearish stocks. S&P 500, 24 bulls to 127 bears. NASDAQ, there's that outperformance on the day, up 61 basis points, but still power bar skewed in favor of the bears. 6 bullish or very bullish stocks, 25 bearish or very bearish stocks. And there's your small cap underperformance: 99 bulls, 508 bears. Bonds higher. And according to the Chaikin power bar, small cap stocks and large cap stocks remain bearish. Major indexes are all bearish. Your stock of the day today, and here's where we can talk about being selective, right? Remember, this is auto-generated. It's an idea. It's something for you to consider based off of our proprietary Chaikin Power Gauge rating. Today's stock, A10 Networks, ticker symbol ATEN. Now, keep in mind, it's a $6 stock. Closed 623 yesterday, up 1.8%. Very bullish Chaikin Power Gauge rating due to very attractive financial metrics, very strong price volume activity, as well as very positive expert activity. So let's dive in. Very bullish stock, strong trend, weak industry group, a lot of weak industry groups for now. Ribbon at the bottom of the screen, you can see we've kind of, changed here back in the May timeframe to being mostly bullish or very bullish. And now, just now, we're starting to outperform the market. So market model getting into gear. More dynamic duo in agreement here for the time being. That's an encouraging sign. However, we're not oversold yet. and money flow is still bearish. This is what I talk about when I say wait for your premium setups. This is an interesting name. Potential personality change here as it begins to outperform the broader market, but just given the volatility in the market and given the fact that, as I said, lower highs, lower lows, downtrend in the near term, we really want to be selective. I want bullish money flow and I want an oversold reading before entering into long ideas. So I'm going to add A10 to a bullish watch list here today. However, I think it makes sense to be a bit more selective with our long ideas going forward. And here's another great example why. Look what's gone on for the past 5 days. All of the major sectors in our sector tracker are down over the last 5 days. Now, comms, materials, and industrials have been outperforming, while energy, with oil, healthcare, and staples have been underperforming. You can see a little bit of profit taking here. Remember, REITs and utilities were kind of the big winners. And we talked yesterday about the fact that these market leaders, these defensive market leaders, healthcare falls into that bucket as well, looked extended on a relative basis. So we're seeing some profit taking here in the short term, but I do think that those trends are still in place. So we are going to look for premium setups in those market leading groups in the days ahead. Middle of the road, fins, tech, and discretionary. Our industry in focus today, bank services, which over the past 6 months has underperformed the S&P 500 by nearly 14%. And that power bar ratio, which measures future potential, is very weak. Group is currently ranked number 21 of 21 subsectors and moved down 1 slot. And you can see no bullish stocks, 7 bearish or very bearish stocks. Some of those indicative stocks on the very bearish side, First Republic Bank, Prosperity Bank shares, and Glacier Bank Corp, FRC, PB, and GBCI, respectively. And as you can imagine with a group that this week, a lot of the names are oversold, but we're going to take a look here for illustrative purposes. Look for potential opportunities. I want you to build your lists. FRC, very bearish stock, week trend, week industry group. Personality change. There's that very bearish rating. We've been on it since September. Started to outperform, and now it's underperforming again ever so slightly. So potential personality change here. Issue is we're oversold, so it doesn't make sense to set up a bearish trade at this point. Did trigger a sell signal, momentum breakdown, but I don't think everything's in your favor here just yet. I think you want to watch FRC, especially I think you want to watch these banks as the yield curve continues to flatten. These banks are coming under pressure. I want to use rallies to sell the weak ones from the portfolio and potentially open bearish trades, not long, bearish trades. FRC fits the bill for a name that we want to add to a bearish watch list and look for an opportunity when it becomes overbought, especially if that overbought condition is met with bearish money flow. That is a great setup. For now, we're adding FRC to our bearish watch list. So A10 to the bullish watch list, FRC to the bearish watch list. Let's take a look at what's trending. Yesterday's S&P 500 movers and shakers. DRI, Darden, catches an upgrade, up 5% yesterday. AAL, a little bit of a rebound as they caught a downgrade late last week. NKTR up 4.6%. No real news to send that one higher. CBRE, Quality Real Estate Company, up 4.28%. NetApp, very bearish tech stock. We've talked yesterday about how tech was starting to, rolling over on a relative basis. In my note to Chaikin Analytics members, here's a very bearish stock that rallies 4%. Might be a good opportunity to go in there and see if there's a trade to the bearish side on that strength. Loser side of the board, Philip Morris catches a downgrade, sends that stock down 7.65%. We've been bearish on that name for a while. PPL, some industry news sends that stock down about 6.64%. Biogen, BIIB, getting hit with a little bit of a patent challenge on one of their drugs, sends that stock lower by 5.86%. PCG, investigation into some potential safety violations, takes that stock down by 5.8%. And Apache APC is an oil company, down nearly 5%. As you would imagine, the energy names continue to come under pressure with oil plumbing new lows, down 7% yesterday. So let's talk about the NASDAQ outperformance here and why I think this is interesting. Because the NASDAQ underperformed, really started to underperform in the late summer. Topped out relative. This is relative to the SPY. Here's NASDAQ on an absolute basis, the RSI of the Qs, and then the Qs relative to the SPY. So NASDAQ made its high here in late July, early August. And on an absolute basis, it made its high in October. But notice, unconfirmed on a relative basis, was already in a relative down trend, and then really led to the downside throughout this 10% plus correction that we've had here in the market. But what's interesting to me is that now the NASDAQ is holding support back here at these April lows, actually has not tested the February lows yet. IWM is below their February lows, and the SPY is testing their February lows. So we also have a positive divergence between price and momentum, and look at what's happening here. NASDAQ is actually beginning to outperform. So to the extent that the NASDAQ can form an absolute base and begin to outperform, I think that's an encouraging sign. I think it's an early tell. Notice we topped early, and perhaps we bottomed early on a relative basis, but it's something we want to keep an eye on. That's why I look at these trends every day and every week. And we'll talk about semiconductors in a minute. But small caps continue to lag. Here's the IWM on an absolute basis, complete breakdown through the April lows. We've actually taken out the February lows as well. 200-day moving average rolling over. RSI squarely in bearish ranges. Registers another oversold reading, which speaks to the strength of the absolute downtrend. And on a relative basis, you can see topped out in the summer. We started talking about it back here in the July-August timeframe, and it's done nothing but underperform ever since. Actually ticking down here, pretty close to relative lows on the year. So no reprieve in sight right now for the small caps, especially on a relative basis. We want to continue to skew portfolios towards the larger names when those premium setups do, in fact, present themselves. And here's, similar to the dynamic that took place in the Qs, here's the XSD. This is the SPDR S&P Semiconductor ETF. And what's interesting to me is you're going to look at this chart and say, Dan, that doesn't look too compelling. And you'd be right. But there's a few things that's interesting to me. First, we've gone from a bearish ETF rating to a neutral ETF rating. And here is our relative strength. Series of higher lows, and now potentially going on the verge of outperformance. Remember, it was the semis that topped out before the overall market on a relative basis and started to roll over. And as the semiconductors were underperforming, that was the one kind of yellow flag that I was keeping an eye on. I think semis and their relative performance tends to lead the SPY or the S&P 500. So if this is a relative base forming and beginning to outperform, that too, like the Qs, could be the early stages of the base being put in for the S&P 500. Now, it's early days for both of these relationships, but I do think we want to be watching them closely, because if semis start to outperform and the Qs start to outperform, it may make sense to become a little bit more aggressive on the long side of our portfolios and look for a base to build for the S&P 500. Finally, some sentiment, some contrarian sentiment drivers here as the S&P 500 trades near 2530. Here's that 13-period moving average of the CBOE put-call ratio back above 1 here at 1.04. Remember last week it was down below 1. Just shows you that investors are still more fearful than greedy. When this ticks up at about 1.1, that tends to be a sign of a tradable low or capitulation in the marketplace. Not seeing it here this time around, but we did see it back in the October-November time frame. But just the fact that investors are still more fearful than greedy, as the S&P 500 thus far holds the 2530 support level, I would not be surprised to see a rally in the near term. But still, the weight of the evidence points to a downtrend, and we want to see 2815 broken to the upside. But we're starting to see some little subtle changes in place. Not enough to hang your hat on just yet, but we're watching them closely. That's it for today. Sign up for the email, chaikinanalytics.com/today.